My name's Simon Brown. This week on Know Your Platforms, we're going to be looking at online share trading. We're going to be looking at the different products that are available within the online share trading environment. We'll touch on briefly. I mean, some of them are quite simple. We know what they are. We'll touch briefly as well on what, some of the details of them. I'm not going to do deep dives on some of the more sort of nuanced products, but certainly we will. I'll give a sort of a brief overview of what they are and how they work. They're all found under the instruments menu on the online share trading platform, and we'll head to that. I'll do live on the website in a moment. Importantly, some of these products, particularly in the derivative space, warrants, futures, whether that be index, commodity, currency, or single stock futures, CFDs and options, all need to have a product registration. And then obviously your tax-free investment also needs to have a product registration. And we'll look at a live example of that as well. Remember, we're here every Monday, Wednesday, Friday, live at 10:30 on each day. We're also streaming live on the YouTube channel simultaneously. So we logged in here. Let's just go to my account and look at those sort of what they call the product registration. So let's say you want to start trading futures. You click on it, it will bring up an option here. Now there's basically two options that you have. The first is to enable one of your existing accounts to also be a futures account. The alternative is to request a brand new account that will then enable futures. Now, importantly, by requesting brand new, that doesn't mean that you are going to have a different login or an additional monthly admin fee. It just means that you'll have, when you log on, multiple accounts. I'll show you an example of that in a second. For me, it's important, in my view, is get the new account. Keep it separate. I've got a number of accounts, as I'll show you in a second. And the key point around that is just to keep it nice and simple. So you know which is your futures account. You know what's available where and the like. And that just really makes life a whole lot easier in terms of understanding exactly what you're doing in an account, makes your tax simpler and the like. When you log in, still same login. You just now get that drop-down menu as I'm showing you up in the top right there, and you can now flip between your different accounts. You can move money between the accounts in real time, so it keeps it nice and clean and simple. The process of requesting and ultimately opening an account will happen overnight. If you request it today, you would get it tomorrow. And if you request a new account, in other words, a different one in its entirety, it'll come with its own BDA number. As you can see, the BDA number is reflecting there. And what that means, broker-dealer account, for the question coming through is what does BDA mean? What that in essence means is it'll have its own tax statements, etc., its own monthly statements, etc. It'll still all be linked to you, your bank account, your email, your login, and everything else, but it keeps it nice and separate and nice and simple. So let's look at the different instruments that are available. Let me do a bit of a zoom here. So some of them are quite simple. I mean, shares we understand shares, but let's go have a look at that. The shares page just then drops you into a screen. It doesn't show you every single listed share on the market. What it does do is it says, well, now search for that share that you're looking for, and Anglo. And then it brings up the different stocks around Anglo so that you can see Anglo American Platinum, and Anglo Gold Ashanti. And at that point, you could either use the short code or you can go straight across over here and click through to the quote page. Let's take, for example, Anglo American, and now you're back on that quote page. We're going to see the same process with warrants. And interestingly, if you type AGL, which is, hold on, I don't know if there are, if you type SOL, S-O-L, SASL, it'll list you all the different warrants that are listed over SASL. Now, I've spoken before, if you want to see details of these warrants, you've got options. You can go to the quote page, and that'll show you the expiry, in this case, August 20. But if you really want the details around the warrant, you need to go down to the filter and actually go to the warrants filter and search it there. Alternatively, if it's a Standard Bank warrant, you can go to warrants.co.za and you will find all the information on those particular warrants there. But as a rule, go to instruments, filters, warrants filter. Same process. Underlying share is SASL. We search for that. And then boom, we get all the Sassel warrants that are available, but it gives us a lot more information as to the expiry, the types, the current gearing ratios, thetas, deltas, etc., implied volatility, and all those other bits and pieces. For CFDs, you're really going to be looking for a underlying. Question, can you just list all? You can list all. It starts to run on a whole bunch. Now, in the case of CFDs, there's only going to be one CFD per product, but you certainly can just say, show me the whole bunch. Let's look at all of the different CFDs that are out and available. But if you're particularly looking and you want a CFD, let's pick ZEDA. I'm pretty sure it's there, last on the list. There it is. There's your ZEDA. It's telling you what your options are, what the initial margin is, in this case, R1.11. That'll be accurate at this point in time. I mean, things can change, and it absolutely can adjust as volatility increases, volatility changes, liquidity changes, and the share price changes. The margin will be quiet. Can you do shorts? In the case of ZD, you can't. And is it open or not? In this case, it is open. Folks, seeing questions, you're welcome to drop your questions in. Let me just get that. Dave, for accounts that are name of another person, do you have to have power of attorney to operate on that account on behalf of the beneficial owner, or is that account that you've just given a label? No, so in this case, it is I have power of attorney for those accounts. I don't know, so that's a legacy. I got this done literally years ago. When I say years, 15. And I don't know what OST's policy on that now is these days, but I have for other people, and yes, it is an account that I have they had to give me a power of attorney for. So basically they opened an account, gave me power of attorney, and was then linked into my account. You're only ever going to see, let's go to NASPAS, that's not what I suppose it was what I was looking for in a sense. NASPAS list all. You're only ever going to see one CFD per, simply because it's a CFD. And there's only going to be one CFD per share. You go long or short, there's no expiries, or like warrants, different strike prices, or single stock futures, different expiries. What you can also do is the hack here is you can actually just change your command up there. Let me zoom a bit. So where it says CFDs, I could say shares, warrants, whatever the case may be. I'm going to park option strategies. I'll come back to them in a moment. Single stock futures, and let's take a single stock future up. And again, list all. And what you are going to find, no NASPAS single stock futures. That, no, I'm surprised by that. That makes very little sense. Let's see what Sassel then pops up with. There we go, Sassel. And you'll see at the moment there's only one. It is the September expiry. Again, gives you your margin requirement. No shorts available on Sassel at this point. The reason for no shorts is invariably because simply Standard Bank are unable to borrow script and therefore can't sell into the market. That initial margin will also quite markedly reduce the gearing level. If we pop across here, gearing 1.17 times. Difference between single stock future and CFD to quickly touch on. The first is single stock futures obviously have an expiry date, whereas CFDs don't. And a single stock future is 100 shares per contract, whereas a CFD is 1 share per CFD. So you can buy in units of whatever you do or don't want. And there you will see the bids and offers. Remember, you're buying at this case at the bid and offer in the market, but your margin requirement per contract is up there. Let me zoom out of that. Will the list be the same? Question coming through from Susan. Nope, there is a much shorter list of CFDs than there are, much shorter list of single stock futures than CFDs. I mean, when I did this on CFDs, it scrolled down past my page. In this case, with single stock futures, a much smaller list. Another key difference, yeah, Susan, you're right. CFDs are OTC, so you take the counterparty risk. Standard Bank, I'm not sussed about that counterparty risk. With single stock futures, they are exchange traded, so you get all of that protection. Tobogo, is there a minimum number of contracts you should buy for CFDs and futures? So there's no required minimum from online share trading. The minimum simply becomes a factor of cost. And for example, in the case of CFDs, you're paying a percentage. You're also paying a flat rate, and you want those minimum fees to be effective, and that really is the deal more than anything else. Otherwise, as a percentage, if you don't, if you were to buy one Zeta CFD, let me see if I can buy a Zeta CFD or CFD Zeta. Yeah, I don't have CFDs on this account, and I don't know that I have CFDs on any account that. Sorry, too many accounts. And now, there we go. I do have a CFD enabled account. So let's say I'm going to buy, and I say to buy one, and I say let's do a limit price on 239 for Zeta. My brokerage is $50 plus VAT. So in essence, it's 58.61. Yeah, I can do that trade, but the costs are going to absolutely kill me. In this case, there's no money in the account, so it's moot. I can't do it. But in the case of Zeta, you want to get that cost of transaction down to something really, really small, rather than in this case, that's just too much, for the exposure that you're taking. So Tebogo, no practical minimum, but in theory, yes. Envil, why do some CFTs have no new positions allowed? So much as we find that the margin requirements change with liquidity, with volatility, and the price, there will be times when it's just where Standard Bank looks at it and says, simply, and here we're talking about longs, not shorts. Shorts is a different ball game entirely because they need to borrow. Sometimes it's just a case of Standard Bank isn't liking the risk environment there at all. Because remember, if you're defaulting, ultimately you're owing Standard Bank money, in which case they will close new positions. They will allow the current positions, but they won't allow any new positions to come into the market. And that's going to be a risk assessment taken by online share trading. More instruments. So let's go back to option strategies. So option strategies are, I'm wondering what it's going to show me here. It should show me the stocks that I can do it. Where essentially you can sell call options to Standard Bank. They are a very complex product. Make sure you very much understand them. There they are. So here you've got the suspendeds, but it's because of the expiries. So suspended no positions, that's the December contracts, which will open in time. At the moment, you're trading the September contracts. And if you want to know more about them, so if you, and these are, you have to, so if you own 100 ABSA shares, as we're looking at that point there, you can now go and create a covered call on that. A covered call, covered means that you have the shares, and essentially you're selling Standard Bank the right to buy those shares back from you at a price. If you want more information, you'll find a whole bunch under downloads, option strategies with Richard Jukovic. You'll find all you need to know about that. In essence, let's see if it'll go. And I do have an option strategy account enabled, but again, I can't remember which one it is. That's the one challenge, is that I enable the accounts, and then I've got, as you can see from that drop down, loads of them, but I don't know which is which. And truthfully, I should ask Standard Bank to fix that up for me. I think that one is my option strategy account. 529. I'm delving deep into my memory banks around this. Now, as I said, I don't hold any ABSA shares. I would need to hold ABSA shares, and then you can essentially set parameters and sell Standard Bank a call. The point is that come September, when this contract expires, if it has gone over, then if it's above, Standard Bank will exercise, and you will then ultimately lose well, not lose, you will sell your ABSA shares. No, I can't. I'm not going to dig into that. I want to do a whole session on covered calls, but I'm not going to dig into it too much right now. Single stock futures, nice and simple. There are only two index futures that online share trading offers. That is the ALSI and the ORMI. The ORMI effectively being a mini contract at a rand a point, the ALSI being the major contract, or the daddy, whatever, the main contract, I suppose, is the correct terminology, which then operates at 10 rand a point. they're again expiring 17 September. A little few days ahead of that, the December contract will then come into force, and the September will be there, and then eventually the September does ultimately, it expires, and I know I can trade that on, I've got two accounts, but that's a futures account with some cash in it. And there you're trading your Aussie September. So you've only got your Aussie, which is 10 Rand a point, ORMI, which is a buck a point. And you can trade within a futures account to then transact in those. Your gearing levels here sitting at around 7 times, and your margin sitting at just under 74,000 for the Aussie, and that'll then be 7,400 for the ORMI, which is the Minio contract. That was index futures, currency futures. So a lot of people are unaware that it's actually a fairly vibrant, and this was, I think it was announced by the minister, was it 2007, 2008, currency futures. A couple of important points. There are 5 currencies, Australian dollar, euro, British pound, and American dollar that you can trade. There'll always be 3 contracts available. The near dated, which is September in this case, then December, and then the 3 contracts out, which is now March 2021. They are all for 1,000 of the base currency, whether that be Aus dollar, euro, sterling, or US dollar. And you don't ever receive the currency. So, and that's why you can trade it. It's nothing to do with offshore limits, etc., because you buy in ZAR and you will ultimately exit in ZAR. And certainly the US dollar one is actually very, very traded. I mean, yesterday 57 deals, today already 32 deals. There are market makers in the market. And you can see our video we did on Friday around market makers. You're getting market makers and the currency futures at the same time. And that is a 0.6 of a cent spread. It's typically around half a cent to maybe as high as 0.7 of a cent. So your spreads are really, really tight. And this can be used just for good old-fashioned speculation. You've got a gearing here of 9.6 times, which is not too shabby at all. It also can be hedging. You know, if you've got a business, you could, and you're buying in goods in foreign currency, and you want to hedge the price, you could use these. If you're going on holiday in December, which is, I mean, you might not be, but if you were planning on going on holiday in December and you want to lock in the current rate, you think, yo, the rand is looking nice and strong. I wish it was like this when I was going on holiday. Well, you can now lock it in at 16.73. And effectively, if the rand weakens, you'll make money on the trade to offset the weakness. But if the rand strengthens, you'll lose money on the trade, and that'll offset the lower amount that you will pay when you buy your currency. And again, I stress, very important, is that you are not going to receive dollars, euros, sterling, or Aus dollar. You're going to get your ZAR back, but make a profit or a loss. There are, 3 contracts. So you will see, because these are futures, you will then get futures pricing for them. So the rand right now is trading 16.62. And there is no bid offer in the far dated contract, which defeats everything I was wanting to show you. So the 14 December. So the near dated is always the highly, okay, there's a bid offer there at least. Excuse me. So you can see that there's a higher price, 1686, 87 in the market. Also a much wider spread. The higher price is quite simply, this is a futures contract, so you're looking out into the future, and therefore, you know, there's a hedge in place, and that hedge therefore incurs the interest. Whereas if we go back to the near dated, there's still a price because it's still, 60 days. Am I correct? Yep, 60 days until expiry. That there tells me that it's 60 days until expiry. So there's still a difference. And futures are going to trade at that higher price for the simple reason that there's an interest component involved. Yeah, you can take a question coming through. In the futures, currency futures, you can take long or short positions. So you can profit from a rising or a falling contract. And as I said, there's a fair decent amount. I mean, 26.5 million, 1,500 contracts traded. This is the September one. I mean, today there are already 32 deals. I mean, it's chunky. And so those contracts, the 1587 contracts, across 32 deals. if my math is right, that's about 50 contracts per deal. And if we run down, and these are all listed today, these last 20 trades are all today's trades, you see some fairly chunky trades going through, and there's decent liquidity being offered by the market maker. As I said, there are 2 of them. You will, of course, hit the better priced market maker when you trade. More instruments, so that was currency futures, and then commodity futures, which is, again, a lot of people don't know about. We have 3 commodity futures on the JSE. We've got Brent. Now, if you've looked at the Standard Bank exchange-traded note on oil, that is West Texas oil. Here we are looking at Brent, so different underlying prices. Again, expiring. Futures are all expiring third month in every year, so they expire March, June, September, and December. Gives you your margins. So currently oil, no shorts allowed, but you can do shorts on gold and silver. What's very important is make sure that you know what the multiplier is. So this is not just Brent, it is 100 barrels of Brent, and giving you a gearing of, just let's call it 4.4, and there's, what am I looking for? There it is there. So there is a market maker here. There is less volume going through on these. The last 10 trades goes back a month, back to June. There is a market maker. The spread in this case, R5.40, considering there's a currency as well. And again, these are non-delivery. You're never going to be delivered oil, gold, or silver, or the currency. And understand that you've got 2 moving parts here. The one moving part is that you've got the oil price, and the second moving part is that you've got the rand-dollar exchange rate. Both of those are influencing the price as you go along. The gold one is 10 ounces of gold per contract, gearing of around 7 times. And again, if you take if we looked at GLD, GLD would be a bad example because there's been cost erosion in that. But if you took the gold price, multiplied it by the ZAR, you get to a price slightly below that because of that interest component. And then there's also silver. And the gold and silver do enable shorts, and silver is 500 ounces of silver, and you're gearing just under 5 times. Again, a market maker, and a spread here of 60 cents on that particular product. Yeah, a couple of folks are saying, can we delve into them in a future webinar into more detail? I will, in both currency and in the commodity futures. I will see, maybe we put them together or do them separately. I'll figure on that. But certainly, I think they're a product that are worth delving into. Today, really just looking at what that product availability is rather than the mechanics of them. Exchange-traded funds. I think we know enough about exchange-traded funds. This is the full list. It's alphabetical by share name. So, not by share code. So the One Invest Gold then comes up at the top of the list. And these are all exchange-traded funds that are currently listed on the JSE, all the way down from the One Invest on Gold to the Signia Top 40. Nope. The question then is, can those all go into the tax-free? No. So there is a TFIA-enabled instruments, and that list is slightly smaller with about 50 products listed on it, and these are the ones that are available. So, for example, it's ETFs only, and no commodity ETFs are allowed in here. So what you've got is all of your equity, but also property, also bond, and then what we've got with the MAPS, the 2 MAPS products, is that they are multi-asset, cash, bond, and equity. And then the NF Tracy will be here, I'm pretty sure. Yep, there's the NF Tracy, which is a pure cash product. The Pref Tracks, which obviously is tracking preference shares. So these are your ETFs that are enabled. Last time I counted, I think it was 52 of them. Question, will the China one be available to put into a tax-free account? Yeah, Susan, it will. That IPO is closing today. Today's the 14th, is it not? Nope, yesterday was the 14th. That IPO closed yesterday. The ETF will list on the 22nd, and then if you haven't and you want to, you can put it into a tax-free account. Exchange traded notes, distinction between ETNs and ETFs is that ETFs physically hold the underlying and don't have an expiry date. ETNs are a credit note and do have an expiry date. Now, many of these we will recognize. For example, there's the ABSA on the dollar, euro, and sterling, where you can take long positions on a currency if you've got a view on the currency. And those are quite lacquer. Let's go quickly look at one of those. NUD, sorry, NU. 1666, 1669, and if we look at the ZAR, slightly above the current rate of 1663, call it 63 and 63 and a half. And this is a spot rate. You're never going to get that practically. But if you're expecting ZAR weakness, this is a nice and simple way. You can see the market makers sitting there, 50,000 and 50,000 there at the same time. So you've got the market makers there. They trade and they do as they say in the sticker. If we zoom out on time, as currency weakens, this ETN will weaken. The other important point with ETNs are those expiry dates. Now, in this case, expiry is 12 March 2042. In other words, it is in 20 years' time. And I'm trying to remember when it was listed. It was listed in 2012, so it was listed with a 30-year expiry. Some of the ETNs, some of the Standard Bank ETNs on gold, silver, platinum, and palladium, which is those four there, are expiring in August. And then the copper, corn, oil, and wheat are expiring next year, but Standard Bank will roll those. The gold, platinum, and palladium, Standard Bank's taking the view that you are able to, no problem, there are ETFs available. Copper, corn, oil, wheat, not, so they will roll them. You're also going to see a whole bunch down here that you probably never heard of. So UBS basically packages up for people. If I take this one here, for example, which is and now I can't remember who it is. They're essentially, it is what they call a unicorn fund. They're looking for unicorn stocks, which you can invest into. The trick that we're seeing is right now, no market maker. And I looked earlier in the morning and there was no market makers there as well, which is no fun and games whatsoever. But this is essentially a active fund that is traded by a third party, and then UBS packages it into an ETN and lists it onto the JSE. Again, expiry, in this case, December 23, so 3.5 years, little under 3.5 years until expiry. If you want more on those, you're going to have to go and Google the individual codes, see what's available. So those three there come from the one investment house, a couple out of FNB, etc., etc. Question from Susan, aren't ETNs then risky if you take credit risk? Sure. Absolutely. If you've got an ETN from an issuer and that issuer goes into bankruptcy, you basically join the queue. You'll be slightly ahead of shareholders, but pretty much behind everybody else. The point is then, who is your counterparty? In the case of, so your ETNs in South Africa, Standard Bank, ABSA, UBS, etc., etc. Never say never, but I would say likelihoods are pretty small. And then the final one is the preference shares. Michael, what happens to your investment when the ETN expires? Broadly one of two things. In the case of the ones that are expiring next month, they're not issuing a new tranche. So those were issued in August 2010. They've hit their 10-year date, they expire, there's no new tranche, you will get paid out net asset value. August 10 is a Monday, but it's a public holiday, so it will effectively happen on the Monday, net asset value, and then, take a couple of days, JC works on T+3, Standard Bank to issue the final amount, but sort of towards the end of the week, you will get the cash out. In the case of the ones from Standard Bank expiring next year, and many other times, is if it's a popular one and if there isn't a product that's sort of usurped it, in the case of the ETNs, they were usurped by the ETFs, then what happens is you will have the option to roll into the new product. In other words, the issuer will say, look, you've got X number of the expiring one, can I just do you a swap and give you the same number of the new one coming along, assuming pricing is the same. What Standard Bank are doing for the current expiring ETNs If you want to move into one of their One Invest ETFs and you've got a decent quantity there, contact them and they will facilitate that process for you as well. But Michael, short answer, either the default will be cash and sometimes you'll be able to elect to roll. Preference shares, this is debt issued by listed companies, a vast bunch of them. Some of them, as you can see from the Implats prefs, just don't trade at all or hardly ever at all. I mean, there is a bid and an offer, but not much transaction. What I would like to see here, but it isn't on this particular one, is to give us some ideas around the yields, etc. Remember, these are debt instruments, and they are, as a rule, paying out dividends, and the rate of payout is linked to the prime rate. The Zambezi Platinum preference different. That is a roll-up. In other words, instead of dividend, it just moves it into the price. So what you can see is that it steadily increases. Now, it obviously collapsed earlier in the year when everything else was under pressure, but what you're seeing there is, in essence, it just rolls up that interest. It doesn't pay dividends out. This is a Northern Platinum, if memory serves, preference share. What's also important, preference shares, no market makers. So the liquidity is for your risk. Check those spreads. Make sure that you're not getting completely taken over by spreads and market makers. And then the filters. And we've got a webcast of the filters. Those are available on our YouTube channel, so you can find that there. We don't need that. I'm not going to delve into that one. Just wanted to have a look at those myriad of different products. And remember that in some cases, for some of the products, most notably your warrants, futures, CFDs, option strategy, and tax-free, you need to have a warrant, futures, CFD, option strategy, or tax-free investment account enabled. That process isn't going to cost you. It'll happen overnight. And with futures, that includes all the futures. So it is index futures, commodity futures, single stock futures, and currency futures. That all happen in that space. And as I was saying, my advice to folks is put it into a separate account. Keeps it clean, keeps it simple. You know what's happening. No worries in that sense there. Ladies and gents, I'm going to leave that there. We've hit our time. I'm not seeing any further questions coming through. Nope, no questions coming in. We've had them all through already. We'll be back again Friday. Just two things are going to be happening up in August. We're going to be changing up the Fridays, probably running a longer period in terms of what we're doing. And we're going to go back to some basics around fundamentals and the like. We're going to be doing, a whole bunch around technicals and fundamentals as well during the month of August. And then on the Wednesday, we're going to be focusing on different tax-free products within the broader Standard Bank Group, Auto Share Invest, which we've touched on already, so we'll touch that again as well. But otherwise, rest of July, normal service continues. Mark, always a pleasure. Ladies and gents, you have a great day further. Stay safe, everyone. Wash your hands and careful. I don't know where you live, but where I live, it is bedonner cold outside. My advice, don't go out. Cheers all.